Today, we'll talk about PayFi, onboarding enterprises into blockchain, into Web3. And for that, we have Tori here with us today from the Stellar Development Foundation.
We focus a lot on real-world utility. Our mission is to create equitable access to the global financial system.
Why does that work better than using some sort of TradFi solution?
If you're sending payments around the world, especially into hard-to-reach places, that's expensive, very slow, and at the end of the day, it's not transparent. It's not traceable end-to-end. And so when there's an issue, you don't know where that transfer may have failed. All you know is that the person is sitting on the other end saying, well, I didn't receive the money.
Why don't we have more enterprises using blockchain rails yet? What's the edge there?
Many organizations in the past had strict policies. They could not hold crypto. That's changed. And now with a growing network and better on and off ramps available to them,
Hey, Sohail here. Thanks for tuning in. Real quick before we begin, if you enjoyed this episode, if you learned something, please consider to follow or subscribe or share this episode. That helps us out a lot. It helps us to reach more people and to spread quality education across the space about crypto and Web3. Also, if you're part of a crypto project or represent one and you would like to come on the show or do sponsoring, please get in touch with us. And lastly, everything we talk about today is for educational purposes and no financial advice. Enjoy the show. All right. Thank you for tuning into another episode of the Teach Me DeFi podcast. I'm excited for this one. So today we'll talk about sort of PayFi, like one vertical, so to say, in Web3, but also more broadly about onboarding enterprises into blockchain, into Web3. From what standpoint is it interesting for them? What's kind of the key selling points? Why should they think about implementing and adopting blockchain use cases? And for that, we have Tori here with us today from the Stellar Development Foundation. Hey, Tori.
Hi, how are you?
Good. How are you?
Doing well, thank you.
I love your background, by the way.
Thank you. Yes, finally a nice day.
Yeah, that's what I thought today. So I'm based in Germany, and finally a nice day is something you say rarely here. So today was the day, so it's good.
Good, that's great. And yes, by way of background, I'm Tori Samples. I lead enterprise payments at the Stellar Development Foundation. I've been there almost 3 years, but have been in the ecosystem for about 7 years because I previously built a digital wallet in East Africa, where I can say the weather is much better and every day is a beautiful day.
Love it. So that's interesting. So immediately you kind of notice the impact focus that Stellar has, from what I can tell. Like Teach Me DeFi is partnered with Stellar, and I went to Meridian last year, and it was a lot focused around like kind of making an impact with the use cases that are developed here in, let's say, in third world countries or other sort of donation-focused industries, but also the whole payment side of things seems to be a strong point of Stellar. So, sure. Yeah, I'd love to learn more about that with you. I don't know if we should dive immediately into PayFi or if you want to expand sort of first about what sort of payment-focused use cases are there that Stellar is focused on, and why are they relevant for enterprises, perhaps?
Yeah, absolutely. Let's start with the background because I think it's helpful context for how we got to PayFi and why it's important for enterprises to jump on this. So the foundation, the Stellar Development Foundation, exists to grow the Stellar ecosystem. The Stellar blockchain has been around since 2014. It's one of the older L1s. And so it's been a reliable payments set of rails for over 10 years at this point. It was developed to create an opportunity for very fast, very cheap, transparent payments from the beginning. That's how it was originally differentiated from Bitcoin and Ethereum back in the day. Stellar has been able to say for over 10 years that you can process cross-border payments on the Stellar network for fractions of a cent in fees and within 5 seconds. Now, what Stellar has been able to add in the last 10 years on top of just the protocol itself is a vibrant ecosystem of wallets and assets and on and off ramps that make that usable in the real world. So we focus a lot on real world utility. Our mission is to create equitable access to the global financial system. I'll say that many of our use cases and our ecosystem companies are very much related to real people, end users, consumers all over the world. But relevant to our conversation today, equitable access, it should be equally true for small businesses, for enterprises, for public sector organizations, for NGOs that want to benefit from the technology and have access to best in class tools to accomplish their goals day to day too. So over the past few years, the Stellar Development Foundation has been leaning into this enterprise vertical and looking at how we as the foundation and the broader ecosystem can support enterprises in their day-to-day needs. One thing that I'm particularly proud of, and the way that I actually came into the foundation, was to build the Stellar Disbursement Platform, which is a way for organizations to send bulk payments around the world. Under the hood, it's just payments from an organization out to many individuals at once, processed in parallel at scale on the Stellar network. In the real world, that could look like cash assistance for refugees or migrants or vulnerable populations. That could look like creator payments, helping people get paid around the world for the content that they're making every day. And so there's no specific vertical that the tool is defined for, but it's been used by organizations like the UNHCR and GIZ with local NGOs to send money into very, very difficult places around the world and bring people into the crypto ecosystem who have no understanding of blockchain or crypto or digital assets. But again, they get to benefit from those best-in-class tools and use stablecoins in their day-to-day lives.
If you take the disbursement case, just to frame it for people, what's the edge there? Why is that better than, or why does that work better than using some sort of TradFi solution to do this disbursement, like you said, into certain regions for those use cases?
You've opened up a can of worms here. I could talk all day. So there is benefits for both the senders and the receivers of funds. On the sender side, if you're sending payments around the world, especially into hard to reach places, to populations who may be unbanked, that's very difficult. So you're going through the legacy financial system, either through banking networks or local payment systems like mobile money, potentially. But that's very expensive. It's very slow. It can take days or sometimes weeks to get that money to the right person. And at the end of the day, it's not transparent. It's not traceable end to end. And so when there's an issue, it's opaque. You don't know where that transfer may have failed. All you know is that the person is sitting on the other end saying, well, I didn't receive the money. And so on the sender side, coming to a blockchain-based system and using open source tools like this Dollar Disbursement Platform, they're able to benefit from those fast, cheap payments that are 100% traceable. So you know where your money is at all times. You can send around the world in seconds for a fraction of a cent in fees. So there's that piece, just benefiting from stablecoins, global rails. And then on the sender side, on the receiver side, this opens up a whole new avenue for them to be paid. So again, whether we're talking about receiving assistance from an NGO or government, or just getting paid, payroll or contractor payments or whatever, this allows people to be paid directly onto their phone into a digital wallet that can go with them wherever they go. So if they're on the move, their money comes with them. They don't have to worry about carrying it in cash, which can be dangerous. They also receive it in global reserve currencies like digital dollars or digital euro that are generally more stable than their local currency. And so they can actually preserve the value of those funds over time by using that digital wallet as a place to hold and transact from.
Yeah, I like it. I think we talked to Decaf as well, which is a project building on Stellar, and they made that case that they help a lot of, especially in regions like Argentina or wherever, where you have kind of a volatile currency, and then you can hold stablecoin dollars in your digital wallet, and you're somewhat protected from the hyperinflation or whatever it is that the local currency is plagued by. Historically, I noticed like enterprise adoption was always this big thing in crypto, right? Like sort of sometimes, the institutions are coming and these memes, right? And I feel like it was always an area that fell a bit short of expectations. And I'm not sure if you still feel like that yourself at the moment, that enterprise adoption is not that high yet. So why is that? Because you also outlined some clear uh, some clear advantages that blockchain has. For example, this like real-time settlement that's so much better than doing like a cross-border payment through that goes through an opaque set of banks, sometimes gets stuck along the way, and you have like days to settle a transaction between, let's say, enterprises in different countries. Now you have, for example, this is like this clear advantage. How do you view the current state of enterprise adoption, and why don't we have more enterprises using crypto rails, blockchain rails yet?
Yeah, it's a good question. I'd say that we're still relatively early, but it makes sense. People make logical decisions. If you put yourself in their shoes, I think most of us would probably have done the same over the last 10 years. What is different now and what enables enterprises to come to blockchain with confidence is the prevalence of stablecoins, the growth of stablecoins over the last, we'll say, five-ish years, and changing regulatory environments. So there's a greater comfort now with blockchain and digital assets than there was 5 or 10 years ago. Many organizations in the past, in earlier blockchain and crypto days, had strict policies internally that they could not hold crypto or that they could not do transactions over a blockchain. That's changed. And now with a growing network and better on and off ramps available to them, blockchain-based solutions are becoming more accessible, and they have more confidence because they've seen the technology play out in many different ways, many different geographies and verticals, and it's been proven. Blockchain is not new at this point. We know that blockchain-based solutions can live up to the high financial and accounting and reporting standards that organizations have to have. So again, I think that it was probably wise for them to be cautious at the beginning, but now that things are proven and there have been solutions tailored to enterprise needs, they're coming to blockchain more and more. And so I'm glad that this is a place where Stellar Development Foundation has chosen to focus, because I think that, again, everyone should have access to best-in-class tools. And enterprises live and die on a very thin edge of efficiency. And so anything that they can do to free up funds, reduce settlement time, access new capital is very important. And while we might hear about the big names, what particularly excites me is the small names, the small to medium-sized enterprises, even micro businesses that can gain from this and improve people's lives in a very, very tangible way.
Okay. Yeah, I'd love to dive into that in a bit, because I think small SMEs might have more of a need for alternative ways to unlock capital and liquidity, perhaps, and that's where PayFi comes in. But perhaps before we get into that more broadly in terms of enterprise adoption, how does Stellar Development Foundation go about bringing them into Web3, so to say? Just for me to frame it, for example, do you guys develop like the business logic around the use case with certain enterprises? Just to give you an idea, I also took up a position recently as a chief Web3 officer at the Nasdaq listed AI company called Oda AI. And what we do there is different things, but one of the pillars is we essentially provide compute for AI inference. But you can't really go with that to an enterprise and be like, okay, do you want to rent a GPU for $2 an hour? Do you want to pay per million tokens of like AI LLM tokens? They're like, what am I supposed to do with that? So we decided to also package it in a way that's familiar to them and build the business logic around it for them so they can use it in their processes. And then they can, for example, pay in a way they understand, like pay per AI processed invoice or something, so they understand they're paying per invoice. This is familiar to us. And the business logic is sort of built for them. So is that something you guys do as well to get those use cases out there, or do you just provide the infra and go, hey, come here, build, or what does it look like?
It's a little bit somewhere in the middle, I'll say. So
Yeah.
we definitely provide the infrastructure. We maintain the Stellar network. It's open source, but part of the foundation's mandate is to make sure that it's performing well and efficiently over time, and to support decentralization of the network as well. Uh, but we do a lot more than that. So we actually build open source tools. The Stellar disbursement platform that we talked about, that's one of those. The other two initiatives that I'll highlight are asset issuance and anchoring. So anchoring on the Stellar network is on and off ramping. And so we actually have a tool for that called the Anchor platform that allows organizations to quickly and efficiently set up those on and off ramping services so that they can serve others. That's one that we've put out there, and then one that I'm sure we'll talk a lot about with PayFi is asset issuance. It's another thing that has been baked into the Stellar protocol since day one. Stellar was designed for very easy asset issuance. That has come more and more into play with the real world asset trend. So we see today that large organizations, financial institutions, regulated entities are coming to Stellar to tokenize real world assets and offer those to others in the ecosystem. So I highlight those three because SDF as a foundation is very involved in them. But we also do a lot of one-off consulting, support, working with individual enterprises, figuring out what their needs are, if they're met by that open source tool set or not. And then if not, likely pointing them to ecosystem companies that have developed applications on top of the Stellar network that are designed to meet those specific needs. So a couple that I'll highlight, one, MoneyGram. So very well-known partnership between MoneyGram and Stellar. That's a few years old now. We worked directly with MoneyGram to help them stand up, believe the largest off-ramping network in the world. They've got over 300,000, I think something like 380,000 retail locations where people can cash out their funds from the Stellar network. So a crypto to cash mechanism there. We work directly with them to help them develop that. That does actually use the Anchor platform, but we do a lot of custom work with them. So that's the biggest side of things. And then on the very small or early side of things, we have the SCF, the community fund, that invests in small projects, new projects that want to build on the Stellar network. And while we do provide funding as part of that process, I would say, having actually been through that program myself in the early days, a big part of the benefit is the feedback that those organizations get, that those startups get from the Stellar Development Foundation. We have a team of reviewers that looks at every single project, that goes through their technical details and is able to advise them on a more efficient approach or something that they haven't thought of that looks like it could be beneficial to them. So again, on the very big and the very small side, we as the foundation are equipped to help organizations come and build effectively on Stellar.
Okay, well, that's interesting. Yeah, I think that answers my question. So it's okay. I also understand. So in some ways you use ecosystem projects, and that's sort of like the decentralized ethos, because there's loads of projects building on Stellar with the open source tools. And then if there's specific, maybe also smaller use cases or companies that fit sort of something that one project is doing in your ecosystem, you put them in touch, that sort of thing.
Yeah, and I'll say too, the foundation is relatively small. We're less than 200 people, but we are firm believers that people are equipped to solve their own problems. They know their needs best. They know their local context best. And so we are not ones who are going to go and mandate these solutions that should be all over the world. We very much rely on people's local expertise to tell us what they need, and then we help them accomplish that.
Okay. And very pragmatically speaking, I'm an enterprise. I want to get into Web3 and I want to get into Stellar. How do I start?
Probably email partnerships@stellar.org and talk to a person. That's
Yeah.
I don't know if that's the most sustainable answer, but I think
Yeah.
that that's something that we are uniquely able to provide. We have an extremely knowledgeable partnerships team that works with enterprises to, again, define their needs and figure out what's best for them. There's also a wealth of material if you go to stellar.org and look at our website. You can see enterprise use cases that highlight how other organizations around the world have used the Stellar blockchain and digital assets on Stellar. And so they're able to pattern match and see what best matches their use case. And that includes information on the tools that I mentioned, the open source software and ecosystem companies that offer services on Stellar as well.
Okay, gotcha. So let's talk about some of these use cases in terms of PayFi, perhaps, and perhaps someone listening will go, "Oh, okay, this fits to my business. I can unlock some efficiencies there. I can increase profits, decrease costs, whatever." What is PayFi? Yeah, what does that entail at the moment? I feel like that is a bit of a buzzword. And what does that have to do with enterprises?
Yeah, so I think it's a relatively new term, new trend. We're very early in this. So the definition is still, the borders are still being created. I think we have a general sense of what it is, but that probably will shift over time. And I have to give credit where credit's due. I think the term PayFi originally came from the Solana ecosystem, but we know that Stellar has been equipped for this from the beginning, and so we're very excited to see growth on the Stellar network with this as well.
Right.
But
that's okay, Tori. We'll bleep that the S word, the other S word is fine.
I don't know. We work with people at Solana very closely. We've got ecosystem companies that straddle both Stellar and Solana. So again, we are not kingmakers. You hear us say that quite frequently. We believe that people should utilize the technology that best fits their need. And sometimes that's Stellar, sometimes that's Solana. But what's amazing to see is more collaboration between L1s and projects that allow people to bridge and take the best of all worlds. So again, we're very, very fine with that. But I'll say like PayFi fits so solidly within Stellar's core offering. So we'll get into it. But okay, so definition of PayFi. I would say, well, PayFi is payment financing. So financing for payment flows. That is primarily for enterprises. But if you think about it, it's really diving into the timing problem, the time value of money associated with payments around the world. We see this most clearly with cross-border payments that, as we've talked about in the past, have been very slow, very inefficient. And we also see this with organizations that have value locked up in illiquid assets that are genuinely valuable, but they haven't been able to do much with in the past. And so PayFi is this beautiful combination of making payments faster, bringing settlement times down to zero, allowing for programmable payments, supporting more diverse liquidity pools, and making the financing of payments better for enterprises overall. So we can talk about what that actually looks like, different use cases. But I think that maybe first, just to make this tangible for people, if we just back up and think about financing generally, we can come back to how it relates to PayFi. So take a step back, think about financing. Financing for anyone, whether it's at a personal level or a business or even a government, comes down to a vast oversimplification, the availability of funds, and then the methods of moving money. So financing, the availability of funds is key, right? So when you have, let's just take a very simple example, a personal credit card. You're going to have the money in the future. You're going to pay that credit card off. But the value of the credit comes in that the money is available in that timing gap. So it's front loaded, so the money is there for you. The method of accessing those funds is, I would say, equally important. And this is going to be very important for the PayFi case later on. Credit cards we've figured out pretty well, at least in the US and Europe. It's very efficient, fine. We know that it's still, there are still fees attached to that, but it's grown despite some inefficiencies. But when we think about larger scale financing, this is where that method of paying is still problematic. There's the question of which asset is being paid or which currency is being paid. How is the person going to receive it? How long does it take to get there? How do you know that it got there? So all of these factors around the method of payment actually impact the financing itself. They shouldn't, but they do. And so it's that availability of funds and the method of financing that is important. Now, think about for businesses, again, the timing gap there is incredibly important because they have many, many inflows and outflows of funds. And so cash management, of course, is important, but just overall, how do they tap into all of the value that they have and make that very efficient? With PayFi, they are able to have better availability of funds because there are larger and more diverse liquidity pools available to them in global reserve currencies on chain. And the method of receiving those funds is exponentially better. They can benefit from all of the amazing factors that are built into blockchains like Stellar to receive payments nearly instantly for almost nothing in fees. And again, have complete assurance as to where their money is, where their value is at all times. We at Stellar believe that we're very well positioned for this because it brings together three separate factors that we've been doing and are good at. So first one is payments. We've talked a lot about how Stellar was built for payments. We've got 10 years of history to prove that we're an extremely reliable payments chain. Then there's real world assets and tokenization. One of the really cool things about PayFi is that you can tokenize anything that has value. So whether that's invoices or receivables or inventory, anything that has value, you can tokenize and put that into liquidity pools and have investors basically buy those sources of value and have that value flow back downstream in different ways to the business. So real world assets are a big second pillar, I'll say. And then the third one is DeFi. And this is where Stellar is relatively newer in this space. We just released a smart contracts platform called Sorbonne a little over a year ago. But the programmability aspect of DeFi allows for almost unlimited creativity in this space. So we know that PayFi is going to look a little bit different for a small business versus a remittance company versus a large fintech. But with that combination of payments, RWAs, and DeFi, all of their needs can be met. And I'll stop there because that's a lot and it's dense. But happy to go wherever you'd like.
Yeah, but you summed it up nicely there at the end. Yeah. And a lot of these things are coming together, I'm just noticing, with payment finance or PayFi. So you have like tokenization, you have liquidity pools and DeFi, and let's just go with the simple use case, right? So I have receivables, and I want to unlock that liquidity. I want to sell them and get money now, which is basically factoring, right? So it would be factoring on chain, or I would take my receivables, I would tokenize them, put them on the blockchain. I would sell them into a liquidity pool, so to say, and receive money. I'd receive it with a discount, so I'd receive less than what they're worth because I'm getting it now instead of in the future. And that person who is giving me that money is basically farming that yield that they in a few weeks, when they get the payments from those invoices, they'll get a bit more than what they paid. So is that like correct-ish?
Yeah, you summed it up great. We'll
Okay.
just let you explain it from now on. So yeah, that is definitely one of the more prevalent PayFi use cases.
Okay.
And it's one that exists today through a stellar ecosystem partner called ARF. And they're doing this every day for businesses around the world. And so they're collecting those invoices or receivables and tokenizing them, putting them into liquidity pools, allowing people to invest in those, and then providing, in this case, USDC to the business nearly instantly. So again, it's beneficial for all sides. It unlocks new avenues of financing for the businesses. And I think the coolest part about this is that this can happen anywhere in the world. So it's not just locked up to providing businesses in the US and Europe with even more tools, but it democratizes financing for almost anyone.
Okay. So I get like one of the selling points of this maybe is you get access to a global liquidity pool, or because you bring it on chain is global, decentralized, and you get maybe better access to liquidity. Is that kind of like tied for you to where does it make most sense? Is it, for example, in places where you don't have that much of a good access in TradFi to, let's say, factoring? Like what are the points where, like, let's say an enterprise is asking, or a decision maker is going, why should I do this on chain versus not? And what's the answer, so to say?
Yeah, I do personally. I think that this is most promising for businesses, for enterprises that struggle to access the traditional financial system. Again, that's probably a bit of my personal bias here in my background, but yeah, it works for companies that historically have been excluded or were forced to pay very high rates just because of who they are and where they are. And with this technology, as you said, they can access global pools and investors that want to buy their value. And it doesn't matter who they are or where they are. So I think that yes, for enterprises that are potentially in developing markets or can't access the traditional financial system, this is extremely valuable. But it's also valuable for those extremely large historic institutions that might be based in the US or Europe because of the efficiency that it enables. So think about, for a large remittance company, money transfer company, they have to pre-fund accounts all over the world in local bank accounts or through partners. And that's incredibly inefficient. It's incredibly expensive.
Like services like Wise, for example, is that?
Yeah, I'm thinking more of like the even more traditional money, like remittance providers. We won't name any, but
right.
If you want to send money to someone around the world for cash pickup, there are a few institutions that have done that for a very long time. But the basic model has always been that those companies have to provide those funds in advance, and they might be able to get interest on those funds locally. But again, it's inefficient, it's expensive, and it takes a lot of management to figure out where you're going to need money and how much all over the world, especially if you're operating globally. And so with PayFi and bringing that on chain, they can basically merge all of those pools into a single capital pool in USDC or another dollar or euro based asset on chain. So stablecoins. We're not talking about tokenized invoices here. We're talking about actual global reserve currencies. And so instead of having that split between 150 countries, you can have that global pool and benefit from being able to centralize that a bit, but then being able to send it out anywhere it's needed within seconds instead of having to manage each pool, days or weeks in advance. I think this is also particularly interesting for me because we know the world is a bit chaotic and we cannot influence what happens. And so when there's a global emergency, disaster, conflict, economic crisis, geopolitical issues that may arise, all of that impacts the need for liquidity on the ground. And we, as humanity, are not great at predicting where things might come up. Sometimes we know, but we're not prepared. A lot of times we don't know what's going to happen. And so for remittance companies or money transfer organizations, they might have a view of the world and they've set up their pre-funding and they think they've got what they need. But anytime one of those events happens, it disrupts that model. And so they might be unprepared. They might not have the liquidity needed, and it might take days for it to get there. And so bringing that on chain allows them to not be reactive and responsive days later, but to actually be prepared for whatever may happen in the world and still maintain that efficiency of just-in-time liquidity and maximizing their total global capital pool and deploying it where it's needed.
It's also a great case for self-custody again that you made, I guess, right? I mean, there's all these local disconnected money systems and in the world in TradFi, and they have to communicate to each other and you have to trust each one, blah, blah. Whereas you could have this one decentralized system, self-custody, you only have access to your money. You don't have to worry about it. And I mean, on the surface, it sounds so much better, right? But it seems to be not that straightforward to get the world to move from one to the other or to integrate with the other. What about sort of like the last mile of it? So I receive USDC, but I'm a company in some country and I need now to pay my bills, and you can't really pay everywhere with USDC yet. So I assume you want to like exchange it. You have to still, to some extent, get whatever currency you can pay your bills in then. What does that look like?
Yes and no. I think that as businesses continue to trade across borders and the world globalizes, becomes more global, we're seeing this change a bit. So let's take a medium-sized company in Nigeria. They might, maybe Nigeria is not the best example, but we'll go with it. They might receive USDC as a result of PayFi. So they've received financing in USDC. And sure, they might need to cash that out and pay locally, but they might also be paying vendors themselves globally. That could be from Europe, that could be from the US. And so I think that there is a portion of that will likely stay on chain. And that's where you're able to generate even more efficiency. Obviously, the less times you take it in and out of fiat, the better. And so I think that there's a bit of a flywheel here that once it's on chain, it's very flexible, it's very easy to use. And as businesses transact more and more across borders, and as there's more of a demand for global reserve currencies like USD and Euro, then it is beneficial to have that on chain. It doesn't need to be cashed out. And so that's one option. And then, of course, there's off-ramping as well. This can be done into local currency, of course. It can be done through stablecoin orchestration platforms like Bridge that allow for cashing out into USD bank accounts almost anywhere in the world. Or it can be done through if you want to keep it on chain but exchange into a different asset, you can go through something like the Stellar DEX or exchanges that allow that to be put into whatever form the enterprise needs.
Didn't Stripe just buy Bridge?
Yes, it did. Yes. $1.1 billion. So I think that points to a great it's a great proof point for the stablecoin ecosystem at large. We know that this has been growing over time, but it's great to see that the world is shifting more and more towards stablecoins.
Yeah, it's a huge case, huge endorsement for this industry. I mean, Stripe is a huge payment provider.
Well, and I believe that Stripe released its annual letter last week, and I think they pointed out. We'll see if I can remember them here. The 4 benefits of stablecoins that they see: basically faster, cheaper, open access, and programmable. And I think that all of that is true. All of it applies to PayFi. And the one that I would add is the traceability, because we know for businesses, they have to have that. They have very high standards for financial reporting and accountability for those funds in a way that individuals might not. And so I think that, again, with that transparency and traceability built in, it becomes a no-brainer solution for enterprises.
Last question. What about productizing this? I know you have the primitives then on chain, and that's amazing, and the open source solutions that everyone can use. But what about productizing it in a way where it's like, okay, I'm an enterprise or whatever, CEO of a company. I want to do the tokenize my receivables and get the cash in. And I want to do this quickly, easily on a user interface, and that can also compete with centralized solutions, this ease of use as well. How do you think about this and the Stellar Development Foundation?
Yeah, that's where Stellar is here to support businesses, private companies that want to build on Stellar. We as the foundation don't have a revenue mandate, and so we're free and flexible to support all parties who want to build on Stellar, which is great. But we've already seen good traction in this space. So with Huma and ARF, they're doing cross-border I should pull up the exact number here. But they've done, I think it's 1.8 billion on chain for cross-border financing. And they're expecting to grow that to $10 million in 2025. So again, this is already happening. It's already out there, already been productized at the application layer. But then again, I think what's exciting to me is seeing smaller local solutions develop for specific use cases. And so like one that comes to mind is JIA, JIA out of Kenya, that does supply chain and overall financing for small to medium businesses around the world. And they're very focused on the growth and inclusion angle. And so again, looking at things like supply chain financing, inventory financing, invoice factoring, and allowing businesses to benefit locally in a way that feels very Web 2. So it's very simple onboarding. I think it happens in like 24 to 48 hours, and then businesses can start benefiting from those flows.
Okay, interesting. We'll have to put these links in the show notes so people can check them out. I'll definitely look into this as well.
Yeah. Well, and I'll point out too. There's a good report by Masari that came out recently that lists a lot of these and shows use cases, and they've got a nice graph in there that lays out. I think they structure it as layers. So starting with the protocol layer, and then looking at like compliance layer and the asset itself, and then all the way up at the top is the application layer that is basically like, how are people accessing this? So if I'm a company in X country, how do I actually tap into PayFi flows? And I think that we will continue to see more and more of those. Another one that I personally really like is Rain cards. This is corporate cards for Web3 companies. It's a very different flavor of PayFi. There's also buy now, pay later that falls into the broad bucket of PayFi. And so I think we're going to see more and more of these companies popping up that make it more seamless for enterprises to access these solutions. Because that's always been the foot gun with blockchain, right? Is that it's great technology, but if you can't access it, it doesn't matter. And so we don't need intermediaries. No one's saying that, but we often do need accessible solutions that are easy to use and feel like just seamless products for a specific niche that allow people to tap into the benefits of it.
Yes, love it. Yeah, I agree. Yeah, the app layer is going to be exciting. Exciting times. Definitely putting those in the show notes. Thank you for coming on the show, Tori. That was amazing. I learned a lot about PayFi. And I guess it doesn't get boring in Web3 with all these verticals and narratives and abbreviations, of course.
Of course. We've got to have at least one new one a week, if not more. Make everything confusing for everyone.
Yeah. I think the latest one that confuses me every time is, I don't even know how to say it. DEF AI, decentralized finance AI, DEF AI. I don't know.
We'll just keep tacking on letters. It'll be great. Then someday we'll figure out that people actually need to understand the solutions that they're trying to access, and we'll stop doing that.
Yeah, and then you're like, fine, the app guys will solve that problem. Thank you, Tori. It was a pleasure, and you're welcome anytime on the show again.
Thanks so much for having me. Really appreciate it.